So the benefit of the ETHFI card is, and you actually get to make use of your crypto while you're while you're keeping a balance.
In Q1, that you haven't really got EtherFi Cash launched. That's a zero over there. But in Q4, you're already generating, $5.9 million.
Growing really fast. It's great. Yeah, we're doing close to $2 million a day on average. We actually exceeded $2 million this week on Monday. So, I mean, that's like a $60-70 million a month spend going through the card, $700,000 a month. Plus, there's a couple other layers on top of that revenue.
Hello， 大家好，我是 Max， 欢迎来到新的一期 MaxAlpha 访谈。在这个系列中，我们会找到 Web3 行业中厉害的创办人以及研究员，借由深度对话的方式了解他们的思考逻辑，试着去找寻一些产业的 Alpha， 自己把市场看得更清晰，成为更好的投资人。Hey, I'm super excited to have someone who has been on my must-interview list for a long time. Mike, the founder and CEO of EtherFi.If you have been around for my channel or like looking at my contents, I've been a huge fan of EtherFi Cash Card, which is one of their, card that lets you spend your crypto directly and, connect with the real world with self-custodial model, which is what I love. So that's pretty awesome. So without further ado, Mike, welcome to the show.
Hey, great. Thanks for having me.
So let's start with this question. You have called EtherFi a neobank. What does that actually mean?And how is a neobank different than, a traditional bank, like a Chase, even a Web2 fintech company like PayPal or Stripe?
We do have to be careful with using the term neobank. We call ourselves a DeFi bank or a crypto neobank because the big difference between EtherFi and banks or crypto or neobanks is that we don't take custody of user assets. We are non-custodial, which means when you deposit funds into the EtherFi product, you actually control those funds. We don't control them. The benefit and the thing that makes it so interesting is that it's a non-custodial alternative to traditional banking. So it gives you all the benefits, all the power of DeFi, which typically includes higher yields, higher rewards, includes these days 7-8% on your stable coins, includes the ability to get 3% cash back on all your spending. Ability to borrow against your crypto. So it's all the power that we've come to expect from DeFi, and you actually get to control your assets. Nobody can seize them or take them away from you. They're truly yours.
You can see the concept of neobank, like a DeFi bank, it's providing much more transparency into people who are using their money. They see where their money is at. They don't know. Your bank is not like the traditional banks. Like you go to a Chase or your JP Morgan and you deposit your cash, and you kind of have to trust the bank to hold your money. But in terms of a EtherFi model, you can verify it on a blockchain. You're controlling your wallets. Deeper about this, how would you explain to a normal people why do we need a crypto native banking, and what's the core value does it unlock for users that simply just not possible in a traditional finance kind of world?
Yeah, I think different people get different kinds of value out of it. If you're based in the US, you probably value the self-custody aspect of it, and you value the higher rewards, so you can do more and get paid more. I mean, that's a pretty good value. I use it basically as an alternative to all my banking. 90% of what I do with with EtherFi. If you live in, let's say, a different country like Brazil or Argentina or other countries where the local currency is a little bit less trustworthy, then what it really serves as is your US dollar bank account. You can take your local currency, easily convert it into stables, into USD stables, and then use that as your savings account, as well as earning all the same rewards and yield. In addition, it gives you access to opportunities that typically would only be available to the high net worth. In other words, access to something like the basis trade or other higher yielding opportunities that normally are only available to the the 1%. And now anybody with a few dollars can get access to those same types of instruments.
This neobank or like a DeFi bank concept, it's not new. I think a lot of competitors in the space are using this concept and producing products that's in this space, like, Plasma. I want to go in deeper and understand what advantage does EtherFi has to be the number one in this space,
over
or
others?
like at least be competing it over others.
So I'll just say a few things. One, we tend to pay the higher rewards versus some other competitors. The cashback might be in points instead of cash. It might be in more transparent. Aside from higher rewards, honestly, I think the other thing is that EtherFi, I think, has earned a lot of trust over the last couple of years that we've been operating. So users generally know that when they work with us, when they use our products, they can rely on them. There's no weird gimmicks or hidden fees, or no way that they're going to get scammed. Usually, if you look at all the lists of the best products out there, I mean, we're usually at the very top. I think because of that, because we have better rewards, we're more trustworthy, and it's a more polished product. I guess that's the other thing, is it's really designed to be the super simple product that feels and looks much more like a traditional fintech.
I agree, and we'll touch on the. I guess from my experience of using ETHFI card is that I really like the self-custodial aspect of it, because I think few products actually offers that, but we'll touch on the self-custodial kind of aspect later on. So let's go into the EtherFi more deeply. I think if someone asks me about EtherFi, I will give him, 3 pillars. Like 3 core products. You have the staking, you have the liquid, and you have the cash, right? The card. But treat me as someone who doesn't know EtherFi at all. Can you kind of help us break it down, and like, what are they? How do they work with each other? And how does it work as a whole ecosystem?
So the typical user, putting aside the complexity of like staking and different almost like crypto terminology, the way a typical user would use EtherFi is they would download the app, iOS app and soon Android app. They download the app, they deposit money into the product. They could do that either through a wire transfer, just like US dollar wire transfer into a through a bank account. They can transfer it from their exchange, Binance or Coinbase, or on chain through crypto. They deposit money. It automatically gets converted into stable coins. They take those stable coins or their ETH if they deposited that, and deposit it into an earn vault. And that vault deploys into DeFi and earns the yields that I mentioned. And then they get a credit card. And they use that card to spend or borrow against their assets. So it's really like this very simple life cycle: deposit money, earn rewards on it, spend it, or borrow against it. So that's the simple use case. There's no seed phrases to remember, no signing weird hex transactions. All of that stuff is abstracted away. You don't have to care what chain you're on. None of that stuff matters. You really just use the product in a super easy, streamlined way.
Right. And then you guys started out as a staking protocol. And I think after that, I think you introduced the EtherFi Cash card. And I think at the time when you introduced the card, it really makes sense for me. Like, card is like the product that connects everything, right? It creates a layer that for users to come in and without any maybe minimal DeFi knowledge and understanding how to use the card, like minimal effort for them to use. So let's talk more about the card. So this is few products that can really feel like crypto bridging to the financial world into my everyday life, because you kind of use the card to pay groceries, pay other things that you need. So tell us from the beginning, like, what is, I guess we already covered the EtherFi Cash card, and how is it different from any other crypto cards or like the traditional finance crypto cards that we have seen before?
So I guess we kind of talked about it, but the basic idea is you can spend your stables one-to-one. So if you deposit USDC, USDT, or even the DeFi strategies, like the earn vault, you can just spend those one-to-one, no fees, nothing, just spend those one-to-one, easy. Or you can borrow against your DeFi strategies or your stables or against your ETH. So most other cards, they either force you to sell your crypto and top up fiat onto a card, and then you can spend that. So you're not really earning much on your balance. Other cards, there are cards that let you spend your stables. More often than not, they have fees. So there may be a top-up fee. There may be a fee to, like a gas fee every time you spend with your card. Lots of cards have that. All kinds of really silly stuff where like you're not really getting the full value of your money. You're actually paying a fee every time you use it. So the benefit of the ETHFI card is none of those hidden fees, and you actually get to make use of your crypto while you're keeping a balance.
What you touched about, like you were describing EtherFi as a credit card, which I think there are 2 ways you can use your EtherFi card, right? There's a debit mode, kind of when you pay with the card, it deducts certain amount of USDC off your card, and then you kind of settle over there. But there's another mode which I think is very, very innovative, is called the credit type of payment, which you borrow against your collateral, and then you kind of spend it that way, which is a very interesting concept. So going on the debit side first, can you walk us through on the full, like the back end flow? Like, how does it work? Because the merchant still gets USD in terms of currency, but it's just that the card automatically, when they swipe it, automatically, first convert USDC or USDT back to USD, and then it maybe goes to the Visa network, and then eventually goes to the merchant, and they receive USD. So
yeah, exactly.
I want to understand like how step by step how does everything works, and then when people apply for a card, does it run a credit check, or which bank are you working for the issuing the card? I want to know like the details of like how it works.
We settle in fiat, so we take all the user transactions, and once a day, once every other day, do an off ramp, and then settle that on behalf of everybody. So the merchant in fact receives fiat, but the user can spend in stable coins. What was your other question?
I'm a person that wants go into DeFi banking. Walk me through the process of applying for a card. And,
right. Sorry, you asked me
what to do on the credit check.
So it doesn't run a credit check. It just doesn't require that, because all the spending on the card is fully collateralized. So we're not having to extend you uncollateralized credit. Like, we don't need to run a credit check. It is a U.S. bank that the card ultimately is issued through. We have what's called a BIN sponsor, which is a company that has a Visa partnership that allows them to issue these cards. So if you're an international user, you heard about the card, it's effectively anonymous for you. Even if you're a US user, I think it doesn't actually hit your credit score in any way.
I guess traditional banks, the reason why they run a credit score is because you are basically, it's not a collateral kind of type of business model. You borrow against your credit score, I guess. So they kind of have to know that you're a person who will, return the money and pay back the money, your loan, to be able to use the credit card. I guess in this case, EtherFi it's a collateral kind of type of business model, so that you don't really need that credit check. So let's touch on another aspect of EtherFi Cash, which is the self-custody wallet. Can you clarify what that means in practice? What my understanding is, it's a wallet that we control, and when you swipe it, the fund, it's auto deducted on the back end and then converted and then into USD. Walk us through the process, and then how does it actually work on the self-custody side?
So when you deposit funds into EtherFi, or actually when you create an account with EtherFi, what happens behind the scenes is a smart contract vault is created on your behalf. So basically a special smart contract is created on your behalf on an Ethereum layer 2. Your private key, which is controlled by a passkey, is what is able to sign on behalf of that vault. You can add other signers if you want to make it more secure and robust, but that's the basic idea. Is you got the smart contract vault, and it's something that you control. Every time you swipe your card, or you want to spend, the system is able to. You give the system permission to withdraw funds from your account, but you can set strict limits on that. So there's only so much that the system can deduct, under any circumstances. And of course, it's your funds, so you can pull them out anytime.
Right. When I swipe the card in the merchant, does it count as kind of I sign in transaction type of thing, and then it just draws
that's exactly right.
So for the smart contract wallet, that's self-custody right now. Is it like it has a private key that maybe we'll be able to use it on other wallets in the future, or how does that work?
Theoretically you could, but that's not the intention. You're not supposed to be pulling this wallet out and using it in other things. It's really dedicated to this. If you were to assign a hardware wallet, for example, which you could do, you just attach a hardware wallet that controls this vault, then that wallet you can use on anything else if you want.
Interesting.
But the default passkey controlled private key is like in a secure hardware enclave. It's not really intended to be used for anything else.
Gotcha. Okay, that makes sense. Next question: small cases of maybe card misuse. reported in the community, which we have heard. I think it's pretty normal for debit and credit cards. We've seen that. So how is fraud or like card misauthorization and chargeback handled by EtherFi in a crypto native system?
Yeah, so it's actually exactly the same as any other card. We did have a few instances of this of fraud. I mean, it occurred. So we have made a lot of improvements. We've banned a lot of sketchy merchants that were doing bad things. So it should be almost entirely solved now. Like they shouldn't be occurring anymore. And we proactively refunded users who were impacted. We didn't have to, but we chose to do that as a gesture of goodwill. That's mostly a solved problem for now. But if you do experience fraud, maybe someone steals your card or your number is compromised, it's handled exactly the same as it would be in any other Visa. You can issue a transaction dispute, and then after some number of days, there's a process, and then you get the funds back. And of course, at any time you can cancel or lock your card.
I think most of the cases related to maybe card number leaked. Either someone just saw your card number and maybe merchant gave it away. Like, tell me, like as a user, as a EtherFi user, what are some of the risks that people need to keep in mind when using this kind of card? Maybe it's just not limited to EtherFi, but maybe credit card,
the same as any card. Just don't share your number. Try to keep it secure. Don't use it in sketchy online sites. It's exactly the same as any Visa. Like just all the same precautions apply. We saw examples of this. There's attacks that take place called they're basically guessing attacks. So they just guess millions of card numbers, and eventually they might hit one that's correct, and they try lots of transactions until they find a merchant that will. So you have to just monitor for this kind of stuff and be careful. If we see on our end that a card is being attacked, through a guessing attack, we may proactively block that card and say, hey, your card's been compromised. Let's issue you a new one. Thankfully, it happens very rarely, but we've gotten better at handling that stuff.
That's actually what I was guessing. Like I was just suspecting if someone else is running the guessing game, guessing the 16-digit number.
Scammers out there, I guess organized crime, that they've gotten good at scamming card programs, and so they go from one card program after another, and they run the same sort of series of tricks. If it works, they scam it.
And the other thing I wanted to tell the user is that I have found this way pretty good, is that whenever you wanted to use your card on a maybe like a more suspicious site, you can always open a new virtual card on your EtherFi card, and then just use that number once on that site, and you lock it, and then that kind of segregate, or at least segregate the risk of being compromised on that site. That a good use of the virtual, because you can create multiple virtual cards, right?
Yeah, that's right. I mean, I wouldn't be creating hundreds of cards, because that just gets hard to manage. But yeah, I think it's a good idea. Maybe have 2 or 3, and then you have the high risk one, and then the one that you use for all your recurring payments that you want to always be active. That's probably a better system, but whatever, that works for you.
Okay, so the next one is interesting. So we have a EtherFi card kind of community group, and then in the community group we talk about the ways of using EtherFi cash so this is pretty interesting. It's like a micro strategy kind of way to use it. So basically you stake your ETH, you stake your BTC, or you stake your liquid USD. You borrow against it using the fiat to pay kind of your regular daily things. And then basically the goal is that you always accumulate your wealth faster than you accumulate your debt, because you're borrowing against your wealth. Basically it's a 4% borrow rate, and then when you stake it in the liquid USD, it's higher than 4%. So meaning that you are basically accumulating your wealth, making sure that your wealth accumulates the fastest. This is a risky strategy, but I think it's pretty interesting that EtherFi allows users to do that. So just want to get your take. Have you seen this, and what do you think?
Yeah, it's pretty common. I mean, look, it's fine. Just be aware that you're taking risks. Yeah,
right.
That's just important to understand. You are taking a risk when you do that, because the liquid vault deploys into DeFi, so you're taking DeFi risks. I guess staking has some risk associated with it too. Obviously, there's price. I mean, Bitcoin and ETH have extreme price volatility. Yeah, just be aware of that. we've only had a very small number of people that managed to get themselves in trouble in terms of liquidations, because we don't let people borrow too much against their assets, because we don't want them to get wrecked. Fine, just be aware of the risks.
I think there are two primary risks, but correct me if I'm wrong. I think the first risk is the kind of the liquid side of it. So you're staking your ETH, you're staking your PTC, you're staking your USD. Maybe, if there's anything happen on the liquid side, you may lose your fund over there. So that's the first side. And then the second one is the liquidation risk, right? So you're borrowing against your asset, and if I don't know what oracle you use, but maybe if the pricing on that asset you're borrowing against, that drops significantly, which will auto liquidate your asset. Does that cover kind of the two primary risks?
Yeah, exactly. It's less than the oracle risk. It's just like actual price risk. Like if BTC or ETH decline, which has happened, obviously. Like ETH was 4,800 all-time high, and now it's like below 3,000 for sure. It happens.
That makes sense. So moving to the next pillar of EtherFi, which is the kind of the staking, restaking business. You guys started out as a staking platform, or restaking platform. This is kind of your primary product for a long time. Can you break it down? How does the business work, and why do we need restaking? Why do we need staking? And what problem does it actually solve?
Yeah, so I would say it was our first product, but the intention was always to go into this crypto neobank direction. So the staking product was meant to be the underlying yield layer for the rest of the product. So it is the underlying yield for staking, for the liquid vaults. It provides a lot of the yield. It's not frankly a great analogy, but you can kind of think of it as like T-bills in US dollars. It gives you, a certain ecosystem yield that you can then use as the foundation for other things. Without going too far into the weeds, with staking, what you're doing is you're taking your ETH and you're putting it at risk, in a sense, to provide economic security to the Ethereum network. It gives you the right, or gives you the ability to delegate the right to somebody to run a part of the Ethereum network on your behalf, and then in turn you get some rewards for it. So that's what staking is. Restaking is just like another layer where you're kind of doing the same thing but for other crypto economic networks, and so you're kind of doubling up on your rewards with some additional risk. So that's the basic idea of staking and restaking.
Understood. So I guess what I heard was staking and restaking is basically like I guess you can call that a liquidity layer, like provides yields to EtherFi users on their underlying layer. How does EtherFi differentiate itself among other staking, restaking players in the ecosystem? I don't know, EigenLayers counts as one, and then others.
So we use EigenLayer to provide restaking services. There's a few other staking providers. So Lido is the biggest non-custodial staking one. Obviously, there's centralized exchanges that provide staking services as well. The difference there is it's custodial, and typically they take a much larger fee on the staking rewards. In the non-custodial world, like the largest ones are Lido, and then Rocket Pool is I think in third place. The biggest difference with EtherFi is that we do restaking as well. I think that's the biggest. So that means the yield is a little bit higher, and we're also very widely integrated in DeFi. We try to be like the DeFi staked ETH asset. So if you want to use your staked ETH in DeFi, we're probably the better choice. If you just want to passively hold it, Lido is a good option. So is Rocket Pool. Yeah, those are probably the things I talk about.
That's a good point, because I've seen the news that you guys partner with some DAT company, digital asset treasury company. They'll be using EtherFi as a primary vehicle to stake or restake ETH. So that kind of aligns with what you said. So that's the staking part, and let's move into the liquid part, which is, I think, people are interested in this one. So I think EtherFi Cash Cards user will be familiar with this one. When you use the card, when you open up the card, you'll be able to see the way to earn more on your USDC or USDT that you store inside your vault. It's called like Liquid USD. That's kind of one of the product of Liquid. I guess the first question I have is, what is Liquid and what does it do? And how does it, combine everything together? So
Liquid is just taking the staked assets, the staked assets, and deploying them into DeFi, into Aave, into Morpho, into various dexes, basically puts it into DeFi and earns rewards on it on your behalf, so that you don't need to kind of spend your time micromanaging these things. It's sort of the easy button for DeFi. Yeah, that's basically it. And then you get a tokenized representation of that DeFi strategy, which you can use within EtherFi to spend or borrow.
In the ideal way is that, so you will have your staking layer, which is kind of like you take your BTC and ETH and you stake it on the protocol, and you have your liquid layer, kind of you take that stake asset and then you basically you put it in the vault, like a liquid vault, and it generates yields for you. And then on top of that is the EtherFi cash layer, which you kind of have a card that you can spend your liquid asset directly. So while you're not spending, you have your asset accumulate yield from that. Is that kind of a good breakdown?
Yeah, you got it. That's exactly right. Those are kind of the three layers.
Okay. And then my question for you is, going deeper into the liquid side, I want to know where the yield comes from first. Like once you stake your asset and then you put it into a vault, where the yield comes from, and then more importantly, what are the risks I should be aware of?
Yeah, so you can actually go to the Liquid Vault page. I think we actually just updated it, so it should be a lot cleaner. It's a lot nicer. It shows your personal earnings. It shows all the strategies, historical performance. Yeah, it's pretty good. And so you can see exactly where it's being deployed. You can click on the smart contract, takes you to Etherscan, and shows you exactly what's in there. Off the top of my head, I don't know the exact strategies, but most of it is Aave on like Full USD and PayPal USD, those types of things, like mostly lending and other stablecoin incentives. I think that's where most of the yield comes from on USD. And then ETH, I think it's there's a couple of incentivized pools that it participates in. There's Aave leverage staking. There's not actually any there is leverage, but it's like for like, it's ETH on ETH. So there's no liquidation risk. So those are examples of strategies that that it runs. The risk, there's a lot of risks. DeFi is risky, but you're probably the biggest risk you're taking is just exposure to all these different DeFi protocols. We try to only use blue chip protocols. We try to be very cautious with it. That's kind of how we make it. We try to manage the risk reward.
Yeah, I would say you guys are probably more on the conservative side, on the liquid.
Right. Yeah, so you're not going to get the most degen yields there. Liquid never has the highest yields, but we've kept people safe so far. So there have been a lot of blowups in DeFi. You would have managed to avoid all of them so far in Liquid.
Gonna say with the balancer hack, a lot of things that you don't want to see in DeFi, and I'm just glad that none of those affect EtherFi. So you guys are safe.
Yeah, we've been pretty conservative. So so far that's paid off.
That's a good thing. Another thing I wanted to ask, because I think you guys just released this. So you had a call, I think you had a call that went through like the EtherFi current status and future status, which I attended that call. I think it's a great call. You guys announced that you guys will be having a new feature called trading, which basically means that you're partner with Hyperliquid to announce that feature. Can you just, with the things that you can tell us, tell me more about that feature and how would that look like? Yeah,
so it's pretty straightforward. It's just a front end on Hyperliquid. Users will be able to borrow assets, from their cash vault and deploy that to trade perps on Hyperliquid. It'll be the easiest way for you to borrow assets against your DeFi positions, and then play around in Hyperliquid. We'll try to again keep it pretty conservative and safe, so that you don't get yourself wrecked. We'll let users make use of it that way.
No, that really aligns with my vision for a DeFi bank. Basically, you provided a really simple interface or user experience for user to come into DeFi, have their cards, they can spend it when they want. When they not spend the assets, they are able to maybe staking or restaking for better yields, or putting into a liquid vault for extra yield, and then able to trade it when they need it. So I think that's very important. That connects all the dots. So next step I want to do is let's look at this picture over here. I took a screenshot what you presented on the EtherFi kind of the financial statement in 2025. This is a good, I think, that kind of follows the traditional like financial statement on a Web2 business. So you're staking, liquid, and ETHFI cash, kind of 3 pillars listed. I want to have this question for you. So help me understand how ETHFI as a protocol or a company how does it make money today? Is it staking fees? Is it liquid vault or like cards? How do you make money?
Yeah, great question. So, I mean, there's multiple layers. Each product has its own kind of protocol revenue line. So staking is, we take a share of staking fees. It ends up being about 5% of staking rewards that we generate some income. Liquid, similarly, there's a fee on the vault these days. The ETH vault, for example, has a 50 basis points, so 0.5% fee. And so that generates some revenue. And then the cash product generates revenue from interchange. So every time you swipe your card, the merchant pays 2.5%, and but 1% of that goes to EtherFi. In addition, when users borrow, there's you pay interest on that borrow, so that there's a spread on that. And then token swaps and liquidations, things like that.
That's interesting. And then one thing really shows up over here is that in Q1 that you haven't really got EtherFi Cash launched. That's a 0 over there. But in Q4, you're already generating, $5.9 million.
Growing really fast. It's great. Yeah, we're doing close to $2 million a day on average. We actually exceeded $2 million this week on Monday. So, I mean, that's like a $60-70 million a month spend going through the card, $700,000 a month. Plus, there's a couple other layers on top of that revenue.
I like it. I recommend everyone who wants to know EtherFi finance side more of it, just go rewatch that recording that you had, the call. I'll put a link underneath it. Let's talk about ETHFI, like the protocol tokens that you guys have. How does that plug into the whole ecosystem of EtherFi? And does it benefit from buyback, revenue shares, or what are something coming in the future?
Basically nailed it. So the protocol does token buybacks. We recently announced a $50 million buyback program that we use to buy back the token, and that's fed from protocol revenues. Token holders exposure to the performance and success of the protocol. Beyond that, we keep it super simple. We don't do really any like token Ponzinomics kind of nonsense. We haven't played those games. We're keeping it really simple and focused on just driving actual economic activity.
So the $50 million, is that like portion of the revenue that you made, or is that a fixed number, or is that like floating?
So that's over time. I mean, we're going to be doing that buyback over a period of like probably a year. That comes from treasury and from a portion of revenue.
Awesome. Next question. If we look 3 years out, what's your vision for EtherFi? Are we talking about maybe onboarding million users that's not crypto native, or are you partnering with banks, or what's your vision for EtherFi after 3 years? What do you want to see happen?
So today we have about 200,000 registered accounts, about 50,000 cards, 25,000 monthly actives, which are very small numbers. Like for a crypto card, those are large numbers, especially to spend. Being able to do let's call it $70 million in spend. Those are actually pretty big numbers for crypto cards. We're by far the largest non-custodial card, one of the largest crypto card programs. But those are small numbers, like in the grand scheme of things.
Right.
We really probably need to be 10x that before it starts getting interesting. Next year, I mean, our goal is to get 500,000 to 1 million active users. I think that will be material. Like if we can get to that stage, we'll be one of the larger neobank players in the world, both in terms of revenue, in terms of transaction volume. It'll really put us on the map. And then 3 years from now, I mean, we're hoping for many millions of users. If we can get to 5 to 10 million users, that'll be a huge win.
What I see right now for EtherFi card, at least for the cash card, is that you probably 80% of the user are at least know about crypto, right? They're familiar with USDC, USDT, they know Bitcoin, Ethereum. But I think it would really make a change once you onboard the people who doesn't know crypto and just want exposure to the DeFi bank benefits. They want higher transparency. They wanted to control their wallet, control their money, and then have a really good card that gives them actual cash back. What's your strategy to achieve those goals? Do you have anything you can share?
The strategy to do what? To keep growing or what?
To keep going and accumulate users, because you talked about that's one of
most
your...
of it is awareness. There's a few major product gaps that we have that we know we need to fill. For example, I think I mentioned we don't have an Android app yet. It's kind of ridiculous because like most of our growth is in emerging markets where like, you know, the Android is by far the dominant phone. Just we need to get that out there. We don't have any localization. So in terms of languages, it's only in English, which is a huge problem. So we need to translate it to Mandarin. We need to translate it to Spanish, to Portuguese, you know, and whatever other languages, you know, we'll see getting traction. Those are major. We need a lot more fiat on-ramps. So we need the ability to just get money into the, you know, the product in any way that people want. So all those things are I guess, limiting our ability to grow right now. And then finally, awareness. And that's, you know, working with you and others, just to get awareness of the product out there is, you know, is incredibly important.
And I talked about we have a small kind of Telegram group that for the community. What I really like about that is you get real-time feedback of the cards, of the product. Whenever I have feedbacks from my group, I provide it to your team. And then what do you know? Like next month, you guys implement a new feature that you know, resolve that issue. So what I really like for a startup size as EtherFi is that you do things really quickly. You update, you adapt, and you make the product better. So love that. Final question is that what do you see are some of the biggest challenge or obstacles?
It's mostly internal. It's entirely our ability to actually execute and get it done. There's a lot of TradFi players that are kind of going down the same path, you know, that are kind of going almost top down. In other words, they have the TradFi rails and they're trying to get their hooks into DeFi. But I think fundamentally that approach leads to a product that's worse. And so, you know, we think we can just provide a better product experience by going kind of DeFi. But yeah, most of it I think is on us. We just need to be just much more effective. That
sounds to me is a good thing, meaning that you can you just need to scale on your team and making sure that because your product and your offerings are there, they're attractive. You just need to make sure that you check the boxes and making sure that people are aware of the product. All right, that's all my questions. This has been great. You know, thank you for jumping on and, you know, sharing all that insights. 今天这期 MaxAlpha 访谈就差不多到这边为止。建议如果大家有时间的话，可以去自己试试看一下 EtherFi Cash 这个产品，因为我觉得你可以体验一下就是丝滑这个体验。那我把我的这个推荐链接放在就是影片下方，你申请成功之后，也可以欢迎加入我们的这个 EtherFi 的 Telegram 的华语社群，我们可以一起讨论一些刷卡技巧啊，或者最佳策略，或者有问题我们可以提出来跟这个团队一起解决。所有链接都放在影片下方，那就感谢各位的观看，我们就下次再见。Thanks Mike for jumping on.
Great, yeah, thanks.